Debt can quietly control your life without you realizing it. At first, it seems harmless: a small loan, a credit card swipe, a purchase you'll pay later. But then, over months, those numbers start to grow. You check your account, and what used to be manageable now feels like a mountain. The truth is, debt doesn't arrive overnight, and it won't disappear overnight either. Yet with the right mindset and strategy, you can regain control faster than you imagine. Picture this: you wake up each morning not feeling trapped by bills, but motivated to reduce them. You start your day knowing every dollar you spend has a purpose. This is the power of smart debt management. It's not about being rich, it's about being responsible. Let's start with the first and most important step: awareness. You cannot change what you don't measure. Take a blank page. List every single debt you owe: credit cards, car loans, student loans, even small payments you've been ignoring. Write down the balance, the interest rate, and the monthly payment for each. Seeing it on paper turns anxiety into a plan. You'll know where you stand and, more importantly, where to start. Now comes strategy. One of the smartest ways to manage debt is to focus on high-interest accounts first. These are the ones quietly draining your future income. Think of them like leaks in a water tank. The larger the leak, the faster your resources disappear. Close the biggest leaks first, and suddenly your progress speeds up. Let's say you have 3 debts: a $1,000 balance at 10% interest, $2,000 at 15%, and $3,000 at 20%. Focus every extra dollar on the 20% debt while paying minimums on the others. When it's gone, redirect that amount to the next one. This creates a chain reaction called the avalanche method. It's efficient, fast, and proven. But strategy alone isn't enough. You need discipline. That starts with your mindset. Debt reduction isn't punishment, it's freedom in disguise. When you make a payment, think of it not as losing money, but as buying back your peace of mind. Every payment is a step closer to independence. Next, control your spending triggers. Many people spend emotionally, not logically, when stressed or tired. Buying something gives a brief moment of relief, but later, the debt causes more stress. Break that loop. The next time you feel the urge to buy something unnecessary, take a deep breath and wait 24 hours. If you still need it the next day and it fits your budget, then it's fine. If not, skip it and put that money toward your debt. Here's a practical example. Imagine you skip to takeout meals a week, each costing $15. That's $30 saved weekly, or $120 monthly. Over a year, that's $1,440 you can apply to your debt. These small choices build big results over time. Another powerful tip: automate your payments. When you rely on memory, missed payments happen. Automation ensures your bills get paid on time, avoiding penalties and protecting your credit score. It also helps you develop consistency, the most powerful weapon against debt. Now let's talk about negotiation. In the USA, lenders often adjust terms for responsible customers. If you've been making payments on time, call your credit card company and request a lower interest rate. A simple 5-minute call can save hundreds of dollars over time. Remember, companies want you to keep paying. They'll often work with you if you ask respectfully. At the same time, consider consolidation options carefully. Some people combine multiple debts into one lower interest loan. It simplifies payments, but only works if you commit to not taking new loans afterward. The goal isn't to rearrange debt, it's to remove it. Another key principle is building a simple budget. A realistic budget doesn't restrict your life, it directs it. Track your income and expenses for 1 full month. You might discover hidden spending, habit subscriptions you forgot about, daily coffees that add up, or online purchases that seem small but aren't. Redirect that wasted money toward your highest priority debts. Many Americans underestimate the power of skill-based income. If your schedule allows, explore small freelance jobs online. Writing, virtual assistants, translation, or graphic design can easily bring in extra cash, even an additional $100 or $200 monthly. When focused on debt, create steady progress. Think of it as accelerating your journey without cutting into your essentials. Another point most people miss: build an emergency cushion, even while paying off debt. It might seem counterintuitive saving while you owe money, but it's vital. Without an emergency fund, a single unexpected event like a car repair or medical bill can push you back into borrowing. Start small. Even saving $20 a week adds up to $1,000 a year. That small safety net protects your momentum. Now, imagine your future self 6 months from today. You've listed every debt, created a clear plan, automated payments, and controlled unnecessary spending. You're not free yet, but your stress is reduced. You see numbers going down every month. That feeling of control, that peace of mind, that's your reward. The truth about financial progress is that it rarely comes from big wins. It's built on steady, small actions done repeatedly. There's no magic solution, no overnight fix. But there is a simple formula: awareness, planning, consistency, and patience. Each one multiplies the other. And don't compare yourself to others. Everyone's financial journey is different. Some start with higher incomes, others start with heavier debt. What matters isn't where you begin, but that you start and keep going. The smartest people in finance understand one rule clearly. It's not how much you earn that decides your future. It is how you manage what you already have. If you master management, everything else follows naturally. So as you listen to this or prepare to record it, take this moment to reflect. What would your life feel like if your debt was no longer holding you back? What dreams could you revive once your financial stress fades away? Debt management is not just about money, it's about freedom, focus, and mental peace. When you take responsibility for your financial story, you change not only your bank account, but your mindset and your confidence. Every step you take from here counts. Start small. Be consistent. Watch your balance drop and your hope rise, because in the end, real success isn't measured by luxury, it's measured by peace of mind, stability, and control over your own future. When you start controlling debt, something interesting happens. You don't just fix your money, you fix your mindset. You begin to see patterns, realize where your habits are costing you peace, and discover how little daily choices shape your future. Managing debt isn't punishment, it's self-respect. And once you understand that, your progress multiplies. Imagine walking into a grocery store with a plan instead of pressure. You know what you can spend, what you can skip, and what truly matters. This level of clarity doesn't come from earning more, it comes from mastering management. Debt reduction is the first real training ground for financial freedom. Now that you've built awareness and started your repayment plan, let's move deeper into the details that create real, lasting change. The first principle is intentional spending. Every dollar you spend must serve a purpose. Before you buy something, ask, does this purchase help me progress or hold me back? When you start filtering your choices through that question, your relationship with money transforms. You stop buying out of impulse and start spending out of purpose. For example, you might love coffee runs every morning, but brewing at home could save $100 monthly. Redirect that into your credit card payment, and suddenly you're saving $1,000 to $100 a year without feeling deprived. Financial growth isn't about removing comfort, it's about replacing waste with wisdom. Next, understand your interest rates. Most Americans know they have debt, but don't know how much it is costing them in interest. Look closely at every loan or card you hold. If you're paying 20% interest, that's $200 each year for every $1,000 you owe. High interest is the silent thief of your progress. The moment you reduce it, your financial health improves immediately. You can request a lower rate, transfer your balance to a lower interest account, or even refinance. These aren't risky tricks, they're legal, responsible tools that give you breathing space. But the real rule is this: never use balance transfers as an excuse to borrow more. The goal isn't to move the burden, it's to reduce it completely. Now, let's talk about mindset conditioning. The human brain reacts strongly to reward. That's why people often celebrate purchases. They trigger small bursts of satisfaction. You can use that same psychology to build positive habits. Every time you pay off a debt, even a small one, celebrate the win in a healthy way. Maybe cook your favorite meal at home or take a relaxing walk in the park. Create emotional rewards linked to progress, not spending. This method strengthens consistency because it connects discipline to satisfaction. Another important step is to track your financial flow visually. Create a simple board or digital tracker that shows your total debt shrinking month by month. Even if progress feels slow, seeing numbers go down will keep you motivated. The mind loves visible success. It turns abstract goals into measurable achievements. Now, let's explore the power of increasing income. Cutting costs helps, but increasing income changes everything faster. The US economy offers endless micro-opportunities: online freelance work, delivery apps, social media management, transcription, or customer service gigs. If you dedicate just a few hours weekly, you can generate an additional $300, $500 a month. When all that money goes directly toward debt payments, your timeline shortens dramatically. For example, if you owe $10,000 at a 15% interest rate and make an extra $100 payment each month, you could finish paying in about 22 months instead of 48. That's more than 2 years saved. And once You finish, that $100 becomes future savings. Every bit of extra income has long-term value when managed right. Let's also talk about spending boundaries. People often fall into debt not because they don't earn enough, but because they live without boundaries. One simple technique is the envelope method. Allocate cash or digital limits for essentials like groceries, transport, and entertainment. Once the budgeted amount is used, stop spending in that category until next month. It forces discipline without stress and creates awareness about your habits. In the digital age, financial discipline is easier than ever. Apps like Mint, YNAB you need a budget, or Rocket Money help you track expenses, remind you of due payments, and show spending trends. Using them doesn't require complex knowledge, just consistency. The goal is to stay conscious of every dollar, because untracked money always disappears quietly. Next, develop the habit of delayed gratification. Instant comfort often leads to long-term struggle. Learning to wait builds mental strength. Let's say you want a new phone, but your old one still works. Instead of upgrading immediately, wait 3 months and use that money to reduce your debt first. After 3 months, reassess. Most times, you'll realize you no longer feel the need to buy it. That's the power of delayed decision-making. It replaces emotional spending with thoughtful action. Debt management also requires understanding the emotional side of money. Many people associate debt with shame or guilt, but these emotions don't help. Replace guilt with accountability. You're not defined by your past spending, you're defined by how you handle it now. Growth starts the moment you accept responsibility and plan forward. Let's take a real lifestyle example. Imagine a man named David, living in California, earning $4,000 a month. He owes $9,000 in credit card debt spread over 3 cards. His minimum payments total $400. Monthly, instead of paying randomly, he applies the avalanche method. He targets the card with the highest interest first, adds $200 extra monthly, and automates the process. He cuts subscriptions, eats out less, and picks up to weekend freelance projects, earning to $150 each. Now, let's go deeper into the psychological benefits debt often creates. Invisible stress affecting sleep, focus, and mood. When you start taking control, your stress slowly fades. You sleep better, feel lighter, and become more productive at work. Financial order brings emotional peace, and that peace fuels more progress. It's a cycle of growth. Another crucial part is building financial habits that prevent relapse. Many people clear debt once and fall back into it because they never change their habits. To avoid that, set 3 simple lifelong rules. First, never borrow for short-term comfort. Second, always have an emergency fund worth at least 3 months of expenses. Third, keep learning about money management regularly. Financial knowledge is a lifelong skill. Watch educational channels, read personal finance articles, and stay updated about safe, low-risk investments in the USA like index funds, treasury bonds, or retirement accounts. Once you're debt-free, these options help you build wealth gradually, without gambling with your future. The next principle is gratitude and perspective. When you start feeling impatient about your progress, pause and remember how far you've come. Gratitude creates patience, and patience creates consistency. Many successful people started with debts far greater than yours. What set them apart wasn't luck, it was steady commitment, month after month, until their situation changed. Now, let's turn to responsible credit use. Once you pay off major debts, don't close every account immediately. Keeping older accounts active and low in balance can improve your credit score, which matters for future opportunities like renting, insurance, or business growth. The key is to use credit carefully, not avoid it completely. Keep balances under 30% of your limit and pay them in full each month. This builds credibility and keeps you financially secure. Also, learn to distinguish between good debt and bad debt. Good debt contributes to your future value, like education that increases earning potential, or a business investment with calculated risk. Bad debt finances consumption that depreciates immediately, like luxury gadgets, impulsive trips, or lifestyle inflation. Understanding this difference protects you from falling back into the same trap. Now, think about how your life will look once your debt is gone. Your paycheck will finally belong to you. The money you once used for payments can go into building savings, travel, learning, or even starting a small business. That's not just financial freedom, it's emotional freedom. But before reaching that point, consistency is everything. You don't need perfection, you need progress. Even if you make small payments, even if your timeline feels long, never stop. Every dollar counts. Every action compounds. Here's a visualization technique that helps thousands of people stay on track. before sleeping. Each night, imagine your future self debt-free, calm, smiling, living without financial fear. Visualize your inbox without due payment alerts, your account growing, and your mind at peace. That simple habit builds motivation on subconscious levels. Debt management isn't just math, it's emotional training for life. It teaches patience, planning, and delayed satisfaction, the same skills that help you grow wealth later. That's why learning to manage debt is the strongest foundation for long-term stability. And when setbacks happen, and they will, don't panic. Missed payments or unexpected costs are part of the journey. The key is to adjust, not quit. Rebuild your plan, make the next right move, and continue. Consistency always beats speed. Finally, remember this truth. Financial peace doesn't come from earning more. It comes from managing better. The richest feeling in the world isn't luxury, it's control over your own life. Every step you take toward reducing debt is a step toward dignity, self-trust, and long-term peace. Debt may have entered your life quietly, but it doesn't have to stay. The choice is yours.